I should probably create a channel here, right? And so if I were starting to create the channel here, I would have actually started the channel here, right? And then, started it like this, right? I've got a channel within a channel. And then as the market continues to move, makes this lower low, then you pull it down here to this lower low here, right? Because we don't know, right? It does this breakout and then it breaks back in. And we're like, okay, well, it could be here then. And so you can start, and then what happens is that as the market continues to move, you need to have, as many touch points as possible. And so, the original channel might have looked something like this, right? Like this way. And then what happens is it starts making this lower low here. Now you're like, okay, well, maybe this is not my proper channel. Maybe I need to adjust it. And you have to continue to move it, right? You can't just make a channel based on its original settings here and then leave this, right? Because if that was the case, then this would have been the channel here, and then it broke out, retested here, broke out again. And it's at this point where you're like, okay, well, my channel is probably not right. I need to probably adjust it because, it's just not, it's popping out so many times here that, and it's kind of retesting on that line, as you can see here, right? Oops. Hang on. Let's put that back. Right. So it's really retesting outside of this channel, coming back to the edge of the channel, come back to the edge of the channel. But when you see stuff like this, you have to start thinking to yourself, my channel may need to be revised, right? And then you just basically delete it here, and then you start again. And you're like, okay, well, let's start again. I've got a high point here, and I've got a low point here, and I've got a double high here. So let's kind of look at it from this direction. Then you can print, and then you can put your, you can start putting your channel here, pull it back, and then you're like, oh, look, I've got touch point here, touch point here, touch point here. That is definitely the top of my channel. Now, we don't know that in the beginning, right? We only know with the data that we have, right? So we may not know that this is the high here, but when the market continues to move, then we're like, okay, well, I've got touch point here, touch point here. So let's draw a channel based on this touch point, pull it back and see. And now we've got low point here, low point here. Well, look, we've got two peaks here, two valleys here. That's a good start to my channel. I've got touch, 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 touch. I've got touch, touch. Now we can draw that descending channel a little bit differently, right? But again, we only know what we know as the market continues to give it to us. And so if we start seeing that our channels just are, the market movement is coming out of the channels a little bit too often, or it's making these lower lows, or it's making these lower highs, we have to start going, okay, you know what? I'm just going to delete my channel, start again, just to see if I have something different. And if you create the same channel, great, you know that you've done it right. And if you don't create the same channel, then it's because the market gave you more information to be able to utilize to create a better channel or a more accurate channel based on new data that's being presented. Does that make sense? Yes, yes. Grace, you have a question?
Yes, yes. Thank you so much for this information. I was wondering, when would you use a Bollinger Band versus a channel? Which, in what cases would you use a channel, and in what other cases would you use a Bollinger Band?
So I personally don't use Bollinger Bands very often. And the reason I don't use Bollinger Bands is because Bollinger Bands move with the market, right? And so if the market continues to rise, the Bollinger Band is actually going to rise with it, right? So let me just add a Bollinger Band so I can give you an example. Okay, so you can see here that the market popped out of the Bollinger Band and popped right back in here, right? The Bollinger Band center is right here where my 21 is, okay? So we can see here that it doesn't touch the 21, right? It pops out here, it moves way past the Bollinger Band here. The market moves up, does not touch the Bollinger Band. Market moves up, does not touch the Bollinger Band. Market comes back in here, does not touch the Bollinger Band, does not touch the Bollinger Band. So the Bollinger Band is helping us understand the trend, right? The shift that's happening, right? still pushing high here, and then it's starting to shift here. So we can see that the market is currently shifting with the Bollinger Band, but the Bollinger Band does not provide true support and resistance like a parallel channel will, right? A parallel channel will actually give us really good support and resistance entries and exits when we're trading. Bollinger Bands don't provide that. They help us understand market direction. And can the market come to the edge of the Bollinger Band and reverse? Sure, it can. But more often than not, it's just providing us a guide of the momentum of the market and not a true support and resistance. So for me, I don't use Bollinger Bands because they don't give me an accurate entry. They don't give me a true support and resistance like a parallel channel. A parallel channel will absolutely give me wonderful support and resistance. And when you use confluence with support and resistance, with fibs, with channels, all of these things will, it's like a checklist. Check, I got this. Check, I got this. Check, I got this. Bollinger Bands don't really give you a checklist. They just really say what the market is doing from a momentum standpoint, but it doesn't give you a beautiful entry like a parallel channel will.
Awesome. Thank you.
You're welcome. Okay. Needy?
Yes. Hi. Good morning. Thank you so much. I'm learning, as always, on all of your classes. What I'd like to know is when I start doing the channels, I usually go ahead and extend right, kind of because I want to see if it's going to continue in the one I just started. And I see that you are adjusting it manually. Do you have a preference? Just going in every day and constantly adjusting, or do you start one, extend it, and see if it'll continue?
When the market is already done this, right? So the market made this move, I will adjust it manually just so I can get the most touch points, right? And then, here as the market, like if the market were here when I was making this, right? You can absolutely go in and do exactly what you're saying. And I do that for sure, right? So you can come in here and you can click on extend to the right. And what happens is, like, if I'm just going to create a channel just so I can show you guys real quick what we're talking about here. So let's say I went here and I did this and I clicked on my settings to go extend to the right. It literally just extends for me, right? So yes, I absolutely do that for sure. When the market's already completed its moves like this, I just adjust manually. So for example, here, I'm just going to go ahead and delete it because I'm going to go ahead and create a new channel here because, again, I've got a higher high and a lower high, right? So it's now moving up here. So what I can do here is I can go to lines and I can go to my parallel channel. I start at my lowest low and I go like this. Now, what's going to happen, guys, is because I already have the extend to the right option on, you can see that my line just went straight out because I've got the extend option on. Okay, you can uncheck that and then it will go away, but let's just do this for now. So there's my channel here, and I'm going to go to this high here because this is my highest high here, right? And so this is the start. Now it's already automatically extended to the right because I checked that box. If I didn't want to do that, I can come here, I can uncheck this, and then it will just give me this. But if I wanted to add it now, I can go ahead and add it, extend to the right, and then down, up she goes. Now, the cool thing here is we've got our we've got some valleys here and we've got our peak here. If the thing just came right here, let me just do this here. So as it was coming here, the first touch point would have been here. So I would have put it right there. Whoops. Hang on, I'm just going to remove my extension. Part of the reason why it's a little bit challenging when you have that extension on is it's a little bit more difficult to manipulate. So here we go. So that's what my original channel would look like here, because I've got my peak and I've got my first valley. So I've got valley, valley, peak, right? Market comes down and retests here. I'm just going to put my candles back on, right? And so I can see that my candles have moved slightly down. So here I would just be kind of manipulating it a little bit here. That's a better channel here. So I've got touch, 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 touch right here. And I've got touching here. So that's good here. Now you notice that we've got this breakout here and then going here. So can you go and take a look and move it like this? Yes, you absolutely can. You can come here and adjust it like this and adjust it, you know, kind of like that, right? So can you do that? Yes. Again, you're going to find whatever works best for you as you continue to go along. For me, this is kind of a breakout, and so I don't necessarily like that as much from a channel perspective. I prefer this channel here. So, and again, it's really a matter of preference. So for me, when I had this line here and it went to the peak here, I'm going to hold that here as my line. The other thing that's really cool, guys, is when you look at this channel here, look what happens when I extend to the left-hand side here, right? You can see here that the market, sometimes what happens is the market literally comes and we can kind of manipulate it this way to see if our channel is indeed correct. So hang on, I'm just going to remove that extension. Like I said, it's a little bit harder to manipulate with the extension. So I'm going to go here, there. So now I've got resistance here, touch here, and then I'm going to take this and I'm going to go, okay, right there. Let's see how that works out. My candles back on. Okay, so again, it resisted a little bit. Okay. So now I've got touch here, touch here, touch here, and support here. Touch, 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 touch. So I can use this past resistance level as part of my channel resistance from a support resistance perspective, right? It comes down here, pops up, and then the channel resists up here and then comes back down. So now I've got touch, touch. Even though this touch is from this other channel here, I can use it when I pull to the left to decide, you know, what my angle should and could be, right? And so at this point here, that's why we can be like, oh, okay, well, maybe it is this way, because now I can see when I'm doing this, I've got touch here and here. Again, the more touches that you have, the better, right? And I've also got touch here and here, right? So I probably just move this just a smidgen right there. And now I've got more touches on my channel, right? I've got touch on the outside, touch on the inside, and now here's my channel moving up, right? And then if you want to extend this, you can extend this. All right. Paulette, do you have a question?
Hi, Michelle. Yes, I raised my hand. I had the question. I thought I understood it. And then you said something else that made me question it again.
Okay.
So if you are doing the channels, are you looking more for the higher, the placing the channel where it has the higher highs or where it has the most touches? And what I mean by that is, so on the ascending one that you just did, I'm noticing by like to the right side, like right there. Yes. See, there are kind of more touches. There are more, oh gosh, go up a little bit higher.
Here?
It's like touching, yes. So that seems to me to be like more activity kind of touching that middle line. So then is that indicative of the true channel, or are you not looking at that? You're just looking for the higher places where it touches. Do you get my question?
No, I'm definitely looking, like, for me to confirm that this is a good channel, I'm definitely looking at, you know, my middle line as well. So you can see here with the channel that I currently have, I've got touch here, touch here, touch here, lots of touches here. And then you can see here how I have got support right here. See how I've got touch, 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 kind of aligning this and then break through. Right, so we've got confirmation here, we've got rejection here, move down, rejected, pushed up, and then here also we came up to the channel here, rejection, pushed down. So we've got some rejection off the middle center line here. We've got touch points on the top and the bottom. So this for me would be the channel that I would draw for this particular pair. Again, everybody will
Okay.
draw it just a smidgen different based on how they learn channels. And, you know, for me, I do look to the left over here if I'm wondering whether or not, you know, this should be included, or whether I should just do it based on, you know, this line here, or whether or not I should do it based on something else. I will absolutely put my candles on, look to the left, and see if I can pull this down here and go, oh, look, I've got resistance here. So that's a good indication that that's the end of my channel. I've got resistance here. And that then also encompasses this pull when it aligns here. So, you know, I kind of manipulate it a little bit just to see where I've got the most touches, where I've got, you know, additional support resistance if it exists here. It happened to exist with this beautiful pullback here. And so that's where I would put my channel based on, you know, looking to the left here as well. Because other than that, you only have one touch point at this point, right?
That's what I was saying. That's okay. Okay. Yeah, that's what I was thinking.
Yeah, so I do absolutely look to see if there's an opportunity for me to extend left and see if there's something that aligns, for sure.
And then the overlap is good.
Yeah, and
Yeah.
then it gives me multiple touch points, which is better confirmation that my channel is in the right place.
Absolutely. Okay, thank you.
You're welcome. Charlotte?
So Michelle, can you just explain by definition the purpose of channels, just to help me understand?
So the purpose of channels, A, tells you what the direction of the market is going in, okay? So we can see here that the market, if you're looking just at your exponential moving averages and your moving averages, we can see the market is bearish. But if we kept looking at the market as being bearish, we would miss this move and we would potentially sell it in this channel and risk a losing trade here, right? So as soon as the market pulls up here and starts making a higher high, that tells us that the market direction may be shifting from being descending to an ascending channel, right? The market direction may be shifting from a descending momentum to an ascending momentum. So that's one of the things. So when the market does make higher highs and higher lows, that helps us understand that we might have a market cycle indicating a shift. Okay. And I haven't gone into market cycles yet, but we can do that later. But so the channel tells us, you know, what the direction of the market is. So if I'm trading here and I want to trade with the direction of the market, every time the market comes to the top of my channel, I should be looking for sells, because that's what the market is doing. It's selling, 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 right? Now, as soon as the market makes a higher high, that tells me, I might actually be getting a shift in the market. And as soon as it confirms with a lower high, that to me is we've got two valleys and a peak for that channel that we can understand where the market can go. And so it tells us the direction of the trend, right? So the trend right now is moving bullish right now. And then it also gives us opportunities to enter the market. So then when the market comes down and rejects off of the edge of the channel here, the top edge or the bottom edge, that is entry points that we can look at as one of the things that in our steps of confluence to be able to enter the market, right? And so if we were looking and we had decided that, like, let's say we had our channels, our support and resistance lines marked up, and the market came here, we could be like, okay, well, you know, the market came here, and like if we marked it up, and if we had other things that aligned for the buy, not just the channel, but we're looking at our steps of confluence. The channel is one of those confirmation steps that says, oh, look, we're buying right now. And it's come to a point where, you know, maybe here when the market officially crosses over this EMA right here, right? When the market comes up, it rejects, closes above this 21. That's a great opportunity for you to go, okay, well, I'm closed above the 21 right now. The market is buying. You know, I could put a trade in right here, a stop loss just below my parallel channel, and I could take this trade up because I'm now above my 21. I've got a small stop loss here below at my channel because my channel is going to provide resistance like it does here. We can put a stop loss down below here and we can start our buying, right? So it gives us entry points and opportunities looking at EMAs, looking at channels, looking at support resistance, lines, things like that. All of those things are going to help us understand where we can get high probability setups to be able to, you know, especially when it's going in the direction of the trend. And we can see that because we now have a channel that's going in an ascending pattern. Does that make sense?
Yes, thanks so much.
You're very welcome. Okay.
Michelle,
Yes.
so now going from what you just said, it broke above that black EMA and you
Oh.
could enter into a buy.
Mhm.
You're on the day chart. So
Mhm.
where would you anticipate it to go?
So what you can do here, so, you know, we're watching for rejection at the middle here, right? So what you can do is you can go ahead and take a look at your other indicators here to help you understand what the market is going to do, right? So you're getting awfully close here to the middle. It's overbought. We can go to our lower time frames here. We can see here that the market's actually coming down now, which means that it's almost at the oversold zone. So the likelihood of it continuing to move up is very good. So where could this market go to? Well, if I'm looking at this, I'm like, okay, well, the market has rejected off the S2 before. So I would, you know, definitely want to see it potentially come back up here to this S2 to see if it will reject again. If it pushes through the S2, then I would take it to the P4, awfully close to my middle line. So as you add your additional indicators, yeah, and you have your pivots here, you could literally go from pivot to pivot to pivot, and take this trade up. But again, you're going to want confirmation that the market is going to continue to move up. And once it, like this can pull back again and bounce off the 21 here. So you can see here the market came down, bounced off the 21, moved back higher, right? It made another higher high here, right? And
So you
so
wouldn't necessarily enter in from the day chart, knowing that it looked
No.
very, very good in that channel and let it rip.
no, because it's
Okay.
in the channel here, what I would wait for is I would wait to see whether or not the market comes back down, bounces off this 21, and then I can get in back in for a buy. But I'm going to get in off my lower time frames. I'm just looking at my higher time frames for, like you can see here, when you mark up your chart this way, right? You know instantly when you go to this lower time frame here, let's go to the hour as an example. You know instantly when you go to the lower time frame here, you can kind of zoom out here and you can go, oh look, I'm in an ascending channel. I'm by the S0 here. I should be looking for buys, right? So what am I doing? Following the market. I'm going to go ahead and wait for my last to be oversold here, and then I'm going to look for a buy. So if it comes down, let's say, you know, and bounces off, you know, I can go ahead and put my 4-hour 21 EMA here, right? It can be like, okay, well, the 21 EMA is right off of this S0. So it may come down, bounce off the S0, and then push up. So again, if I'm at the S0 and the market does come down here, then that is a good probability opportunity for me to buy it. A, it's oversold on pivots. B, it's bouncing off a higher time frame 21, which is always really great, right? C, I'm going to look at last. And again, these are all the confluence steps that we're going to take. I'm going to look at last. And if last has got snow on the mountain and the median and it's moving up, and then I'm, you know, buying with the market, right? So, you know, if you want to, you know, if you want to sell, you just understand that you're counter trend trading. You can totally do that if you want, but you want to have confluence for that counter trend trade, right? Because, you know, from here to here, how many, and you want to make sure that you've got a good risk to reward, right? So we're talking about 13 pips. So for me, I'm definitely not selling because I'm only getting 13 pips on here. And for me to have a good risk to reward, I'd be risking like 6 pips to get 13, right? To have a 1 to 2. I don't like that. I would much prefer to trade with the trend, right? So I would wait for the market to come down, wait for confirmation that the market is ready to buy, and then I would look to buy with the trend. Does that make sense?
Yes, it does.
Okay, good. Kim.
How many confirmation you take trade?
So for me, I like as many as possible, right?
Okay.
And so for me, looking at the steps of confluence, I would be looking to my EMAs, I would be looking to my pivots, I would be looking to my channels, but ultimately, I'm looking at LAS. LAS is my confirmation because when LAS is completely oversold and it's hitting a resistance point, that's when I'll take the buy. I'll make a risk to reward judgment, and I'll just say, okay, well, it's completely oversold now, so I wait for it to be oversold. Once it's oversold, then I buy with the trend, right? Because when you buy with the trend, you're more likely to, get into good profit because you're buying with the momentum of the market. And then, of course, you're looking at your pivots and your LAS for opportunities, and you can use your channel, as an opportunity to, take that trade. Now, I don't trade Odd Chef, although I have in the past. I've caught some really good pips off of Odd Chef, but it's really slow, like really slow. So when the market is aligned for that buy, will I take it? Sure, I'll take it. If, I'm not going to leave pips on the table if something gives me a beautiful entry, but this isn't really a pair that I trade very often. But if it does, give me that alignment, then I would definitely take it. But I'm looking at all my steps of confluence, and the more you have, the higher the probability that you will be successful.
Okay, you don't have minimum.
I would say that minimum you need LAS confirming, right? Ideally, if you want pivots, like right now, if it comes into this oversold area and pivots is confirming that, like, you're moving with the trend, right? So you've got trend there, you've got pivots here telling you you're in the oversold position, and once LAS is confirmed, then go good. So personally, I would take it if it's got at least 3. Okay. Laugh.
Hi, Michelle. Thank you.
Hi.
Michelle, on this particular screen that you're on now, looking at the last mountains, I noticed that only yellow is is overbought going to the oversold area. Do we not pay attention to red and orange and the stochastics?
We do for sure, but it depends which pairs we're trading and what kind of trade that we're trading, right? So because this is a really slow pair, we can definitely wait until these ones are completely oversold. But you can see here that orange really doesn't get oversold. It hasn't been getting oversold. It's moving up, moving down a little bit, and then moving up again, moving down a little bit, moving up again, a little down a little bit, up again. So it's continuing to make these higher highs. So if I always waited for this to get to the bottom, I'm not gonna catch my trade.
Okay, so
right?
the pair makes a difference. You would not do this with a fast moving pair. You'd want your last mountains to be aligned.
Well, again, for me, it's really important with a high volatility pair that I understand how that pair moves, right? So if I were trading NAS, would I wait for this to come to the bottom for me to trade it? No, I would get in on yellow every time I'm in on yellow, right? Because yellow tells me immediately what the market is doing, right? So I really want to trade with immediate because I know that immediately I will get into profit because it's immediately going in that direction. Now, obviously, the lower it is down here, right? Oversold, 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 the better, because you're going to be able to catch, a nice strong move, right? So, if you can get it when it's completely oversold, better, right? That's always the best opportunity to make more pips. But sometimes the market just doesn't give you that, right? And so, when the market is moving in your, you're taking a trade in the direction of momentum, and the market's just not making enough of a pull down to be able to give you, a good pull down on orange, can you still take that trade? Sure, you can take that trade. I don't know that I'd take this trade. I'd probably wait for it to do a pullback and see, if the market's going to pull back. But I do know that that 21 is here, and the likelihood of it rejecting off the 21 is pretty high, right? We can see strong rejection here. We can see that the market came down here, rejected, pushed up again, pushed through, pushed up here. And it was kind of hanging out of this channel. So again, it was trying to resist the channel and just broke right back in. But the likelihood of a strong rejection here is pretty good. Who knows how long it will take to get there, because it's a chef pair. It takes a long time. But if it does come back down and this continues to move down, then yes, I would go ahead. But again, I'm going to toggle down and look at my lower time frames to confirm a better entry, right? Like you can see here, I'm almost completely oversold on the hour, right? So if it did come down here and retest this S0 and everything was pointing up to be able to continue to buy, that's a good opportunity.
Yeah, got it. Thank you, Michelle. Very helpful.
You're welcome. Stephen?
Hello, Michelle.
Hi, Stephen.
You've answered part of my question, but for you to enter the market at a lower time frame, will you have to draw channels at a lower time frame, or you still do it daily or 4 hours?
No, I will. So we only got to the daily. I absolutely do channels in the lower time frames for sure as well. Yes,
Yeah.
absolutely. Because you can have channels within a channel,
Yeah.
right? So you can see here that the market is definitely, kind of moving up here, but you can see that it's really not making, much of a move higher than it has here. So could I do, kind of a channel here? Yeah. Okay, so right now, I have this ascending channel within this channel where it seems to be rejecting, strongly off of this area here.
Yeah.
Right. So yes, you can absolutely do channels within a channel. And
Okay.
here, when the market was kind of moving down here, now here I actually wouldn't have drawn a channel. Here I would have drawn a wedge, because it was
Right.
really doing really making more of a wedge here
Than a channel.
and a parallel channel, right?
Mhm.
So again, with our patterns that we talked about yesterday, right? We talked about this being that pattern where it moves up, comes down here, breaks out to the upside, right? That's literally exactly what it did. So if we were looking for opportunities, we're looking at our channel here, we're looking at our wedge. Where are we selling it from? Look, this is making a clear line to the downside. This would have been a beautiful buy here off of this. Are we taking it to? Well, we're taking it, potentially up here, right? The market would have come up, pushed down, and then made it up here. Would I have held this long? No, I wouldn't have. I would have watched for confirmation as soon as this candle formed here. I'd have been like, oh, I'm out of this trade. Came back down, pushes off of this channel here. I'd have been like, yeah, I'll take that again. And then where would I have taken it? I would have still taken it here. And then I would have, had that full trade here to the, the edge of my channel. Right. So
Thank you.
You're welcome. And then if you had done a fib here, I bet you that's, that's probably the 78.6 there. But yeah.
Hey, Michelle, can I see what last says when you pull it up for the bottom of that wedge? I would love to see what it says.
Yeah, for sure. So right here, oversold, oversold, oversold at the bottom. Perfect buy.
That's awesome. Thank you.
Yeah, this is where you use all those steps of confluence to go, oh my gosh, I'm at the bottom of my channel, I'm at the bottom of my wedge, LAS is telling me go, right? I've got, you know, who knows, like there's support here from a support perspective. Right, you can see the market came up, rejected here, supported here, resisted here. You know, we've kind of got some areas of confluence here. So where do you take your, so we don't know about this line yet, right? We just start looking at our channel here. We're looking at our support and resistance here. We're looking at LAS here. Where do you take your stop loss? You take your stop loss just below this area here, and then you go.
Michelle, can you show how you did it so quick, how you make the last appear and disappear?
Yeah, you just go anywhere in the white space and you double click and it will make it appear. The same thing goes for Trading View. If you have Trading View and you want to get rid of any of the indicators that you have up that are showing at the bottom. So let's say I added the 1466 to my Trading View in a stochastic down here. You literally just click anywhere in the white space, double click, brings it up, double click, makes it go away.
Thank you.
You're welcome.
And also,
I'm sorry,
Michelle, one question with all of this. I know that you do cryptos as well. When you do cryptos, do you see that this is working in order to know when to buy a coin to hold, if there are specific coins you're looking at that you're not necessarily going to be CFD trading?
Absolutely. This is what I use for all my crypto trading. I use marking up charts like this because, you know, if you don't have LAS and you don't have other things, this is the #1 way to become profitable. A, know how candlesticks work. B, know how to mark up your charts. If you know how candlesticks work and you know how to mark up your chart, you can be wildly successful at knowing when to buy crypto, when to exit and move your coins into stable coins. Because, you know, if we go, let me just see if I can bring up in Trading View. Give me 1 second here.
Especially because in the crypto space, sometimes there's so much manipulation with what's happening in the news. I wasn't sure if this LAS and all of this, if crypto respected this. So it's great to know that.
And fibs with crypto, like, honest to goodness, it's like brilliant. It's so brilliant. Let me just pull it up here. One second, and I'll pull up my crypto chart.
So I don't know if any of you are doing it, but like all the money that I'm making scalping, I'm basically just using that, investing it and buying cryptos when I need to. And then it's like you're giving, you know, win upon win upon win.
Right. Okay. So here's an example of a crypto chart. This is Aave, right? I've got some pivot lines here. I've got, you know, this 1466 here, right? Let me just put it here. So we've got, you know, I got some other indicators here as well. Here, right? So I'm watching. So here, you know, if you're looking for a good opportunity to buy, right? It's crossing here, telling us, hey, I'm going to buy. Oh, this is a 15-minute. Let's go to the higher time frame. Higher time frame is definitely better for understanding markets. So if I were doing, you know, if I were trading, again, you're going to want to go to your higher time frame and you're going to want to mark up your charts, right? You're going to want to put all of these support and resistance lines in.
Do you prefer the Ichimoku cloud on cryptos?
Sorry?
Do you prefer the, is this the Ichimoku cloud?
It's not, it's just a different indicator
Okay.
that I've used in the past. This is called the multi-type shifting predictive moving average.
Oh, wow.
I know, right? Hi, honey.
Can I use your phone for a second? I want to call Kaden and ask you if he wants to play.
Sure, baby. Sorry, guys. Here you go, honey. Okay, So, so one of the cool things about using TradingView, guys, is you can, if you only have so many indicators, like if you have the free version, you only get so many indicators available to you. So you can choose something like the 6 exponential moving average and 2 SMAs. So here, this is one indicator. So you're only using up one of your allowable indicators, but it's going to allow you to put all of your moving averages in and your simple moving averages, which is like the 4 and the 8 kind of thing, right? So I can't put the 21 moving average here, but I put the 21 as an exponential moving average, right? So which is fine. But then I only use up one of my indicators to put all of my moving averages on my crypto chart. Right, so for me, that's really awesome. And then you can add other indicators. I do use this on this other indicator here in conjunction with some of my other things, because last is not necessarily available here, right? So you can mark up your charts, you can do your channels, you can do all of that stuff here. It does this cloud is part of this indicator here. So give me 1 second. I'm just going to turn it off just so that you can see how we would do this. Okay, let's go back on. Okay, so you can see here, we would go ahead and put in some support and resistance lines here, turn our candles back on afterwards to, you know, really make sure that we're doing it right. And whatever crypto that you're in, you know, kind of thing here.
So specifically with last, the cryptos that we find on there, same thing. And then you're just using these for the ones that are not on there because you're accumulating this coin.
Right, so here's my coins list, right? And so I want to be able to see how my coins are doing, right? So I can go here, I can mark up my charts here. Oops, here we go. And I can, you know, come here and do my channel, right? So I can go here to my lines and I can go, okay, well, I'm going to start my channel. Okay, so again, here, I'm not using this highest high because again, it kind of went sideways here for a bit, guys. I don't want to use that, right? You can see here that it did totally go sideways here. I'll show you with a rectangle, right? Market went sideways here, up and down, and then broke out to the downside, broke back up, retested, triple top here, down she goes, right? So now you're like, okay, I've got a bottom, I've got a top here. As soon as it makes the second bottom, there's my channel, right? Okay. So that's what I'm watching for, right? So when it does the triple top here, right, then you can go to your lower time frames and check to see whether the market was ready to sell. If I go to the 4 hours here as an example, you can see here on the 4 hours, it came to the top of my channel. It's retesting this high here. I'm crossing to come down. What's it likely going to do? It's going to come down. Do I know how far? Nope, I don't know how far. It's resisted here a lot. But if I wanted to exit my position here and then see whether or not I want to get back in here, right? That's a lot of money, right? You can totally exit your position, move it into a stable coin and watch it here, right? That's $587 of extra money per like when you're trading, like when you're moving into stablecoin. Like if you exited here and then got back in here, you have that many more coins without adding any more money, right? So, and then of course you're waiting for the breakout because now you're under all your EMAs and you're like, oh, I wonder if this is going to break out like it did over here. Let's see if it breaks out. And if it does, where am I watching? I'm watching here and I'm watching down here, to see, right? So now I'm watching to see whether or not I should get back into my position with this coin, right? Comes back here, goes up. So now it's going sideways again here, right? So I can see on this lower time frame here that we've got some movement here. On this 4-hour time frame, we've got support, support, support. Oh, it's making that triple bottom again. What do we know what happens at a triple bottom? Probably going to go up. Look, my indicator 1466 is telling me it's going to go up. I'm going to exit my position here and I'm going to re-enter my position here. And now I just made all that many more coins by re-entering my position with $1,497 pips there. So that's 149 more dollars. I literally just increased my portfolio by 25% by doing that. But yeah, use TradingView, use your channels, use your support and resistance, mark up your charts, learn the patterns, learn how to use your indicators, 1466. This is how you grow your wealth in crypto. One of the ways. Absolutely.
Thank you.
You're welcome. Cookie.
I was just kind of wondering, when you had so much confidence and proof that you could enter it and the market will go in a certain direction, you mentioned a couple of times that you could put your stop loss here, and it wasn't like that, you know, the exuberant number of stop loss to try and cover it. So if you're going to go into that later, that's okay. But I just got curious how you kind of, you know, eyeballed it.
How I go first, how do I look at my stop loss? Hang on,
yeah.
Let's go here. So when I'm looking at my stop loss here, guys, typically in a typically in a forex pair, I usually do a 30 pip stop loss. But one of the things that we want to do is we want to look to the left to see whether or not there's an opportunity for it to go further than 30 pips or for us to get less than 30 pips here. Okay, so the market comes down here, it moves down here. And so it's at this point here where you're like, okay, well, should I be entering this trade? Let me take a look. LAS is aligned here. So in this case here, this entry here, as you're watching, provides you with a really good opportunity to put a stop loss right below the lowest wick of your candle here, which is super, super low, right? That's like 8 pips. So you could do like a 10 pip stop loss here, right? Because you're looking to the left. Where did the left go? This is on the higher time frame here, right? If it happens to go down there, we don't want to be stopped out. So we want to give it a little bit more room than this last lowest candle, right? So in this case here, you could have given it a 10 pip stop loss. That would have been an incredible risk to reward. For me here, if I would have taken this trade again, we're going to learn fibs tomorrow, guys. So don't worry about this right now. But I'm going to go swing high to swing low. Where I'm going to take this trade, I'm going to take this trade to the 78, the 61.8, right? And so this is where I'm going to take the trade to. This is my, and again, I could put an alert here to see if it's going to go higher, right? You can see it went right to the 78.6 and bounced right down. But I could put an alert here, but this is, you know, this is kind of my TP area that I'm looking for it to come to. I'm looking for it to for sure go to the 61.8, which is the #1 retracement zone. I'll put that as blue. Okay, so if I have this, this is my risk to reward, guys. I'm going to do a long position, which means I'm buying. Okay, and I'm going to go take it to here. And I'm going to take this middle part here down to my entry. Right here, here's my risk. Right there below my candle here. So I have a 7.3 to 1 risk reward. That is very good. That means I'm going to risk 1 with the hopes of getting 7.3. And as you can see, it went even better, right? We've got lots of confluence here saying, take the trade. LAS is at the bottom. It's at the bottom of my channel, right? It's on a strong resistance point on the 4-hour. And I've got a great risk to reward. These are things that you have to decide and go, you know what? This looks like a great trade. I'm going to take this trade. And then you take the trade. And along the way, if you want, you can do multiple TPs. You can do a TP at the 23.6, you know, at the 38.2, whatever. You can certainly do that. You can watch to confirm that it's going to cross above this 21. As soon as it crosses and closes above the 21, you're like, yes, this thing's going further, right? Because that's every time it crosses the 21, I'm like, yeah, baby. And I stay in the position, right? Because I know that if it comes down, it's likely going to reject off the 21 and then continue moving in my direction, right? So when you see the market continue to move and close above here, right? So like right here, the market moved up and was not able to close below the 21 or above the 21 here, right? Then pulled back, right? Do you exit the position? No, you don't have to exit the position. You're still in great profit at this point, right? You might just do a pullback, reject here, and then do that, which is exactly what it did. It rejected off the 8, pushed back up again, right? So these are longer term trades that are going to take a little bit of time and a little bit of patience. And if you want to exit at the top here, when it pushes above the 21, right, it literally came almost right to that 50 and then just rejected right back down, right? So could you take it here and just close your position? Sure, but you have to be watching because it didn't quite make it to the 50. Right. So, but there are lots of options for you. And every time, like for me, lots of times what I'll do is every time it goes, 20 pips in profit, I'll move my stop to profit. And then as it continues to move up, I will continue to move my stop up in profit. So if I'm just kind of taking this trade here, I might have got kicked out of this trade in profit here. And then I could have looked for a re-entry. Where's my re-entry? My re-entry is here off of the 4 and off of the 8 here, because it's likely to come down, reject, and then push up again. So I could have taken another position here and then, gotten in again, try and catch more pips again.
Okay, I appreciate that. I can also see that one of the green candles had a long wick. So if I moved my stop to profit, I could have also been stopped. If I
would have
that's
absolutely been stopped out in profit. I know I would have been
Yeah.
stopped out in profit here.
Okay.
I totally would have. Right, like that was a really good move. Like literally, let me just find it here. From here to here, that was in 20 hours. It went 53 pips. Right. If I was moving my stops to profit, I absolutely would have got whipped out of this trade. Would I have re-entered it again? Yep. I probably would have put an alert here at this 8 and waited to see if it came back down to this 8 and rejected off the 8, and then I could look to see, again. So here is a little bit worse risk to reward, only because your stop loss needs to be down here, right? But if you've got everything aligned for the buy again, right there, the market came down here, whipped off the 8 here, snow still on the mountain on the higher time frame. So now you go to the lower time frame to look for your entry. I wish I would have put a mark.
Got a couple of hands raised for questions there, Michelle.
What's that?
We have a couple hands raised for questions.
Oh, okay, perfect. Okay. Anyways, you go to the lower time frame to look for your entry on the lower time frame, and then you take it again. Okay. Osman?
Yeah. Hi, Michelle.
Hi.
Yeah, I really want to find out, is there any difference between MA and MA cross?
So moving average and moving average crosses is the exact same, only moving average crosses allows you to enter 2 MAs, right? So you're entering, like for me, I enter a 4 and an 8, and when they cross, they create this little X. Let me just zoom in here so you can see it. Okay, so when they cross here, it gives you this little X. So you can see this is the MA cross for the 420, and you get this X here. Okay, so that's what moving average cross gives you. It gives you these little X's. You can see right behind here, I'm just gonna bring to front here, you can see that the cross happens here. When the 4 crosses the 8 to come down here, that gives you that little cross, right? So that's what the moving average cross is. It gives you 2 MAs, and then it will give you a cross when they actually cross one another.
Oh, okay, okay, thank you.
You're welcome. Stephen.
Yes. Hello, Michelle. Earlier on, you had an indicator just below the first 1466. Which one? Which indicator is that?
Oh, I'm just playing with something right now. This
Oh,
is
you're
just
playing
a
with
volume oscillator. I'm always testing. So
Okay.
I don't know that I love it right now. I'm just playing with it. And if I decide to use it, I'll let you know. But right now I'm just playing with it.
Okay, thank you.
You're welcome. Okay. Rebecca.
Good morning, Michelle.
Good morning.
My question is this: when I am on LAS and I go to put in my MAs, I go to my indicators like I normally do on any other chart. But when I click them a couple of times, it doesn't show up on the left, so I can go into settings and redo. It doesn't show up.
Okay. So I will absolutely tell you it does. It's just really tiny and it's hard to see. So I'm going to give you an example. I'm just going to open up a brand new chart. So let me just save this here. Okay, so I'm just going to open up a brand new chart just so that you can see. Okay, so if I wanted to add some MAs here, I'm going to go to indicator and I'm going to type in, let's say I do EMA as an example, exponential moving average. Okay, you can see here, this default is this thin, tiny little line here. And so if I added a bunch of them, so let's do another one, EMA, and I'm going to put it again, you can still see it just got a little bit darker. The reason it got darker is because it went right on top of itself because it's defaulting to the main setting of whatever it is there. So if I wanted to add an MA cross now, MA cross, you can see it just added two thin little lines, and I'm going to add a second one, and now it's thicker. Okay, so these lines are here. You just have to find them. Sometimes they're hidden over top of, you know, if you've got a lot of stuff going on, it might be really hard to see. So what you have to do. So for me, I always go to a place where there's hardly anything here. I will double click and then it will come up. And then I can go ahead and change it to whatever it is that I want here. So for example, if I wanted to do a 421, and I always do the 421 first, guys, instead of the 48. The reason I do the 421 is because it defaults to a 9, and the 8 and the 9 are so close that it's so tricky for you to be able to click on it. So I always do the 21 first, which is going to separate my EMAs that are finished and ready to go. And I will be able to clearly see the 9 there that I need to double click on to be able to manipulate the settings again and change them. So I do the 421 first before doing that, just because it's so much easier to be able to see, because I'll show you here what happens here. Okay, so see how I still have this thin little line here. I'm just going to double click on it and you can see here, see how it's a 9 here? This 9 is like literally like right here. And if I had done my 8 first, my 8 might have kind of been covering it up and it would have been really tricky to see. So that's why I do the 21 first, and then I can click on it again and go ahead and do the 4/8. And then it will be much, much easier for me to be able to see where it's actually going. Okay, and there's my 8. See, and now this one here, this thin little line here, that's my EMA. And you can see that it's literally hiding behind my 8. That's what I mean by saying you might not see it because it's just hiding. It's hiding below this. So now when I want to adjust my EMAs that I'm going to add, if I only had, like if I had this 8 here, I'd be like, I can't see it, it's too hard. So you have to kind of look for this thin little line, and then you can double click on it and then change it to whatever you want it to change to. In this case, I'll just go ahead and add a 100. What's going to happen when you add that one, guys, now you see there's still a thin little line here. It changed to purple because you just made the other one purple. So now I'm just going to double click in here, and now I can change it to 800 if I want. And then I go ahead and add the other one. But if you do them out of order and you do the 8 first, it might be really hard for you to see the lines. And so that's why if you do them, the 21 first, then you're not going to have any problems. You'll just have to look for that thin little line, and then you're good to go.
Perfect. Thank you so much.
You're welcome. Okay, Charlotte?
Yes, Michelle. So what does the short and long mean?
So long means that you're buying, and short means that you're selling. So it's literally a trading term for buying and selling. So there's different terms for buying and selling. So if you're doing HFX, it's a put and a call. If you're doing, you know, trading, it's always been long and short. And, you know, layman's term now is, you know, buy and sell. But the true terminology for buying and selling is going long and going short.
Okay, so that means the same thing when you clicked on, I think it was the 4-8, it said long and short.
So this is long and short. Now, it basically means that, so you're putting your smaller value in the short position and you're putting your longer value in the long position. So whatever your shortest one is going to go here, like the smaller time frame. So here I'm looking for 4 candles worth of data. Here I'm looking for 8. So my bigger one is going to be here. My smaller one is going to go here. So it's different than actually taking a long, like trading long or trading short. That's different. This is just looking for the shortest number of candles and the longest number of candles.
Okay, yes, that's what I meant. Okay, thank you.
You're welcome. Okay, Rebecca, did you have another question? Nope. Okay, good stuff. So I'm going to go back and I'm going to pull up my chart layout again.
Michelle?
Yes.
I guess it's a comment. I guess through experience, just as you continue to do it, you know that each line represents like the 800, the 100. Did you like post it somewhere until you learned it, or?
Oh, the colors?
Yeah.
Yeah. So I'm kind of a little bit nostalgic. And so I'll show you here. If you can see this little picture, I kept it, right? So, well, this is a different one right here. So I typed them out and I literally put it right by my desk. So that way I could be like, okay, these are my colors for everything that she does. And so I used to have one for, you know, what's the 50, what's the 200, what's the 100, that kind of thing. So it would be like 100 is, you know, 100 is purple, 200 is red, things like that. And so as I was learning my channels, I like popped this up there. And so I could look up every time I was like, oh, what color am I using for 1 hour? Oh, right, it's blue. And then I would just have it. So I would have like these little cheat sheets, right? I would have like a lot size cheat sheet where I was like, okay, well, there's this much money in my account now. How much should my lot size be? And then I would do the math on STNU and I would do the math for indices and things like that. And then I would have like a sticky that said, okay, if I'm trading this, this needs to be my lot size for these pairs kind of thing. So I created all these cheat sheets for myself because it does take a little bit for you to remember all this stuff. You're learning a new language, right? You're learning how to do something that most of us have never done before. I know I didn't know anything about trading. So for me, I would just create these little cheat sheets and then just put them, you know, kind of up on a board here beside my computer. And I would just look to the left and go, oh, right, that's right. That's what it is. And for my lot sizes, I literally had like a sticky piece, a sticky thing here. And I keep this sticky thing right by, because every day as I grew my account, I would change my lot size because my account was growing. And so I wanted to increase my lot size so that I could continue to compound. And so sometimes daily, sometimes, you know, in a few days or maybe a week, I would change my lot size sticky and I would adjust it with the new lot size because my account was growing. And so then, you know, after I learned to be able to do the math really quickly, I didn't need the cheat sheet anymore. But in the beginning, I sure did. Okay. I was like, oh, I don't know. I don't remember what my lot size is supposed to be for this pair. I need to write it down. So that's how I would do.
Thank you.
You're welcome. Tom.
Hi, Michelle. Thank you. When you are at the top or bottom of a channel and you're looking to see if price reverses, are you waiting on the close of that candle? I'm assuming so, but I just wanted to be sure you're waiting for the close of that candle before you decide whether you want to say, okay, I'm out of this trade now, or how are you, what are you looking at? Are you waiting on that to close? That's my question.
No, I might wait it on it to close for an exit, right? Because if I'm looking to see whether or not it's going to close below the 21 or close above the 200 or something like an EMA, I will wait on that candle to close for sure. But if I'm looking for an entry, I don't wait on the candle to close. So for example, you know, when the market came here and pushed down to this area here, see how it wicked back up and it rejected it? If I had an alert right here, right? So let me just go